Thank you very much. Let me welcome you to MedZone African Motives. Today, I want us to look at accounting grade 10. I want us to look at accounting grade 10, whereby we are going to do a revision on that accounting grade 10. We are going to do our revision and preparation for the paper that was written in Limpopo, in 19 March 2025. So this paper was written in 19 March 2025. So we are going to look at that. So we are going to, for now, do revisions on question 1 and question 2. So we are first going to start with question 1 and question 2. So let us be together from the start of this presentation to the end of it, grade 10s. So now there are instructions and information. These are our instructions, and please go through these instructions. They are very important. Go through the instructions. Don't ever ignore what the instructions. So that is that. But a very important instruction is that the candidate may use blue or black pen or dark pencil to answer the question paper. So you can even see that this instruction is bolded. So that is that. Go through the instructions. They are very, very important. So now let us quickly go to question 1. Let us go to question 1. So our question 1 is about accounting concepts and source documents. That is what you're going to look at. And then 1.1 says, choose the description in column B. That's the term in column A at the best. Write only letter to F next to the question number 1.1.1 to 1.1.5 in the answer book, and there is a given example of 1.1.1a. So that is that. So here is our column A and our column B. You remember very well that in column A, we are talking about the terms. These are the terms. And column B, we are talking about the descriptions. So that is that, people. So the first one, 1.1.1, it talks about drawings. It talks about drawings. So we want to know the description that is going to match this term drawings. So as we can go through all this description together from A up to F, as we can go through together, good people, you can see that the F is correct answer. F is correct. As F says goods or cash taken from the business by owner. So true is we are talking about goods and cash taken from the business by the owner. Why? We are saying true is that is when the owner takes money or goods for personal use. Get that straight. That is when the owner takes money or goods for personal use. So it is not a business expense, but it reduces the owner's investment. So that is obviously the correct answer there. It's F. Now going to 1.12, it talks about current assets. And if you go through this description, see which description do match the current assets, you can see that the E is correct. E is correct. As it says, current assets. Those are assets that will be converted into cash in the next 12 months. Current assets. So we are saying current assets will be converted into cash in the next 12 months. So we know very well that current assets are the short-term assets. For example, we talk of cash, debtors, stock. Those can be quickly converted into cash. Cash is already what cash, but we have debtors, we have stock. So those they are expected to turn into cash within 1 year. So that is exactly what E describes. So that is that. Now we are going to 1.1.3, going concern. Going concern. So as you go through this description, you can see now A is correct. Do match what a going concern. As it says, the business will continue to operate with the foreseeable future. So that is that. This concept assumes the business is not closing down anytime soon. So financial statements are prepared with the idea that the business will keep running, So the business is not going to close down anytime soon. That is going concern. So A is correct. So A is correct. Now we come to 1.14. It talks about prudence. Prudence, if you can go through this description, you can see now B is correct. B do match this term prudence. B is correct. So as it says, a business should never overestimate its income or assets and profits. So with prudence, we are saying be cautious, be cautious. Don't show profits too high or assets too valuable. Always prepare for possible losses. That's what this concept is all about. So that is exactly what B explains. So that is that. Now coming to 1.1.5, that is, we are talking about matching. Here we are talking about matching. So if we go through this description, we can see that C do match matching. C do match matching. As it says, expenses and income should be recorded in the correct financial period. So matching means that income must match the expenses used to earn it. Both must be in the same accounting period. Both must be in the same accounting period. That is exactly what the C says. So that is that. So hope we are together on that. So we can go to our answer book that is given and write those in our answer book. So here we are. As we have said, 1.1, we have said the correct answer there is F, 1.1.1. 1.1.2, we have said E is correct. 1.1.3, we have said A, and 1.14, we said B, and the last one, 1.15, then that's when we say C is correct. So these are what we have already talked about. So now let us go to question 1.2. Let us go to question 1.2. So here we are on 1.2. 1.2 says use the words from the text box. This is our text box. Use the words from the text box to complete the sentences below. Write only the words next to the number in the answer book. For example, 1.21, debit note. So that is that. So now let us go through our text box. We can see we have debit note, cash register roll, credit note, receipt, credit purchase invoice, credit sales invoice, and deposit slip. So now let us get to 1.21, which is the one that we're going to start with. It says, when money is deposited into the bank account, dash is completed. So the correct answer there is deposit slip. This is the one. So it means here we are going to say deposit slip. Deposit slip. So why are we saying that it is the proof of deposit? It is a proof of deposit. So completed whenever cash or checks goes into the bank. That is why it becomes what? The correct term for that we are to fill in. And there's missing wait. 1.22. The dash contains details and the total of all cash slips issued by a cashier during a business day. So now we go into our text box and you can see now cash register roll. So here we are talking about what? Cash register roll. Cash register roll. We're talking about cash register roll. So that is our answer. Cash register roll contains all cash sales for the day. So It records every sales made by the cashier. It shows the total cash received. Get that straight, good people. So that is where we saying cash register role. Now coming to 1.23, when a person makes a payment to a business, dash is issued. Dash is issued. That is 1.23. So here we're talking about a receipt. A receipt is issued. When a person makes a payment to the business, a receipt is going to be issued. So here we're going to talk about a receipt. The correct answer there is receipt. So a receipt. So we know very well, good people, that this is given when someone pays the business. So it is a proof that the payment was received. So it is issued to the customer. That is that. 1.24, when a business buys stock on credit, the dash is received. When a business buys on credit, what are they going to receive? So they are going to receive what you call credit purchases invoice. So this is what they are going to receive. Credit purchases invoice. So they are going to receive credit purchases invoice. Credit purchase invoice. Credit purchase invoice. Sorry. They're going to receive credit purchase invoice. So that is that. So with credit purchase invoice, it is received when you are buying goods on credit. Supplier send it to show what was bought, how much was owed. That is that. 1.25, when goods are returned by a customer, the business will issue what? Will issue a credit note. The business will issue credit note. They are going to issue a credit note. So we know very well that it is issued when goods are returned. And this is going to reduce what the customer owes. And this happens when goods are damaged and when goods are returned. So these are our answers for question 1.2. Now we can clearly write them in our answer book. Can clearly write them in our answer book. That is 1.2. 1.21, remember, it was what? Deposit slip. 1.22, it was cash register roll. 1.23, it was what? Receipt. It was what? A receipt. And 1.24, credit purchase invoice. Credit purchase invoice. The last one, 1.25, is credit note. So that is that. So now we are to move on to another question. Question 2 now. We are to be on question 2, accounting equation. Now we are to be on accounting equation. Question 2, accounting equation. 2.1 says, indicate the effect of the given transaction on accounting equation. Asset is equal to equity plus liability. So show an increase with plus and a decrease with minus. For example, bought stationery for 150, cash. So this is what now we're going to look at. So let us start with this example that we are given before we can attend to those transactions. We know we have this assets is equal to equity plus our liability. So when you bought stationery for cash, we want to know whether this is going to affect our assets, equity, or liabilities. So when you buy stationery, it means our assets is going to decrease because we are going to take out money to buy that stationery. Also, our equity is going to decrease our equity is going to decrease because you're going to part ways with what with the money that we have in the business. So that. So this is the example that we're given, and now we are to attend now to the questions now. We are to attend to the questions now. As we have said, we have what? Assets. As we have said, we have assets is equal to equity plus now liability. So this is this. So let me write it in such a way that it will give us a space. We are saying it's asset is equal to equity plus liability. So that is that. So now let us come to the transactions that we are to attend to. So the first one, 2.21. 2.21 says, issued an electronic funds transfer to Telecom to pay telephone account 210. So we are paying a Telecom, good people. It means if we are paying Telecom this much, 210, money is going to go out and our assets are going to decrease. Our assets are going to decrease by 210. Our assets are going to decrease by 210. So also you're going to have expense now. Our expense, which is going to decrease our equity. Our equity is going to decrease by minus 210. So meaning to say assets is going to decrease by 210, and this is going to affect our also our equity, as this is an expense. Because once we are paying telephone account, this is an expense, and expense decrease our owner's equity. So this is how it's going to affect or effect on our accounting equation. We'll be together on that. So now let us move on to 2.12. As it says, the owner increased his capital contribution, from 150 to 175. This was increased from 150 to 175. So how are we going to say? So it means our bank is going to increase. Our bank is going to increase because now we are contributing what? A capital. As we are contributing a capital, we're talking about this is going to be deposited into our bank. So bank falls under our current assets. So our assets are going to be increased by 25,000 because you're going to say 150 plus 175. It will give you 25,000. Okay, sorry, I wanted to say we are going to say 150,000 minus 175. We want to know the increase. We want to know the increase, and the increase is going to be 25,000 because it increases from 150 to 175. It was 150 and we are increasing this capital to 175. So we want to know how much we have increased this. So it's simple. So we're going to say 150,000 minus 175,000 for us to know the increase. And it's going to be what? It's going to be 25,000. Our increase is going to be this much, 25,000. Hope we are together on that. So now what we are going to say, because we are to show this on our accounting equation, we are going to say plus 25,000 on our assets and plus 25,000 on our equity. So that is how we are going to show it on accounting equation. Now let us move on to 2.13, where it says petty cash voucher issued for stationery bought for 300. So here we bought 2.13, we bought stationery And we know very well if we bought the stationery is an expense. Get that straight. Stationery is an expense. We bought it with 300. So cash is going to decrease because you're going to take out money for us to buy this stationery for 300. So cash, we know it is under a current assets. So it means our cash is, we're going to decrease our assets by 300. Our assets are going to be decreased by 300 because we're going to take out money to buy that stationery. So cash decreases. So it means now our assets is going to decrease by 300. Also, like we have said, stationery is an expense. So it means our owner's equity is going to decrease by 300. Our owner's equity is going to decrease by by 300. So that is that. Cash is an asset and assets are going to be decreased. Or stationery is an expense. It means now our owner's equity is going to be decreased by 300. Hope you're together on that, good people. So now let us move on to 2.14. Here we are. Here we are on 2.14. 2.14 said bought ready stock on credit from SASSA suppliers 6,500 less than 325 discount. So you bought stock on credit with this much. Now you have to less the discount of what? Of 325. So you're simply going to say on 2.14, you are going to say 6,500 minus 325, and you are going to get what? 6,175. So 6,175. So what does this mean? So it means stock is going to increase because you're going to buy stock. Remember, we buy stock, trade stock. We buy stock into the business, and trade stock falls under current assets. So this simply says our assets are going to increase by this much. So our assets are going to be increased by this much. So meaning we're going to say plus 6,175. We're going to say plus 6,175. Also, because we are buying a stock, because we are buying stock on credit. Remember, we are buying on credit. Very important. We are buying on credit. So it means our liabilities are going to increase. We are going to increase stock that we buy on credit. So it means now our creditors control is going to increase. So it means now we are going to say now we are going to have 6,175 under liabilities. Remember, our this is supposed to be like this. So this is supposed to be like this. So that everything will be clear. So we are here now. So as we have said, we buy stock on credit. We buy stock on credit, and then if we buy stock on credit, it means now we are going to increase our stock. The assets are going to increase, and we are going to increase our liabilities. So that is that. Now going to 2.15. Let us attend to 2.15. 2.15 says sold goods on credit to Escolis 4,800. So here we are selling goods on credit to Escolis. We are selling, as business, we are selling the goods on credit to Escolis. So we are going to say, for example, our sales, because When you're talking of sales, you're talking about what? Income. And then what is going to happen? A data is going to increase. Data increase. Data increases, and you know very well when you talk of data, we're talking about assets. So if we're saying data are going to increase by 4,800, these are our data, our assets are going to increase. Also, we can talk of what? Profit. Profit. So once the profit increases, it means now we're going to have what? Equity. Equity is going to increase by 4,800. Here, remember, we've said the assets are going to increase by 4,800. So now we have to have a final effect again. We have to have what we call final effect. So our final effect is that we are going to have assets of how much? 4,800 minus now 2,800, which is a cost price, which is our cost price. Now we are going to have how much? We are going to have a plus 2,000. A plus 2,000 for assets. And also we are going to have equity, which is going to be a plus again of 2,000. So that is that. So that is that. So hope we are together. So on that, this 2,800 it's a cost of sales. Remember, it is an expense, this one. It is an expense. That's why we subtract it from 4,800. It is an expense. So when you're talking about that cost of sales, as you say, is an expense, it means stock is going to decrease. So stock is going to decreases because asset is going to decrease by 2,800 and expense equity is going to decrease by 2,800. So that is that. Hope we are together on that when you're talking about the cost of sales of how much? Of 2,800. So now let us come to before we can go there, let us say how we are going to now record it. So here you see this is how we are to come up or how we get to 2,000. So now we are to show it on accounting equation now. We are to show it on accounting equation, which is very important. So let us go to our answer book and see how we are going to record them. Let us go to our answer book. So here we are on our answer book. Remember, the first one was where we paid a telecom 210. So we have said the money is going to go out when we pay what? A telecom 210. So we have said here we paid a telecom 210, and we have said this is an expense. So as we have said, this is an expense. It means now the money is going to go out, and this is going to affect our current assets. Our assets are going to be affected, and also the expense, because once we paid a telecom 210, it means you're talking about expense, and this is going to also minus our owner's equity. So that is that. So 2.12, remember, that's when we're talking about the capital contribution. This one we're talking about owner increases capital contribution. We have said owner increases capital contribution of 150,000 to 175,000, and we have said we are going to say 150,000 minus 175,000, and then we happen to get 25,000. So it means now we're going to increase our bank by 25,000, and this is also we're going to increase our equity by 25,000. So here we increase our assets and equity by 25,000. 2.13, we remember that is when we were talking about the stationery that was bought. This one, it was for stationery. This one, it was for stationery. You remember the stationery was bought, and we have said a stationery, whenever we're talking about the stationery, we are talking about the expense as well. We are talking about the expense. So it means now our church is going to decrease because we're going to buy a stationery. It's going to decrease by 300. And because it's an expense, our owner's equity is going to be affected by 300 as well. So that is that. But with a 2.14, this is where, if you can remember, we bought a stock. We bought stock on credit here. We bought stock on credit. Here we bought on stock on credit for 6,500, and you get the discount of how much? 325 discount. So it means that now when we say 6,500 minus 325 of discount, we get how much? 6,175, which is this one. So because we are buying a stock, it means we're going to increase what? Our assets, because stock falls under assets. So increase our assets, and we also increase our liabilities because we are buying on credit. Hope you are together on that. Now 2.15. 2.15, if you can remember here, 2.15 is whereby we sold goods on credit. Here we are selling goods on credit. It's about sold goods on credit. Here we sold goods on credit, or sold goods on credit. Selling price, it was 4,800. And we have cost price of 2,800. So here it simply says there are two effects here. There are two effects. Our debtors are going to increase by 4,800, and our debtors falls under assets, under current assets. So they're going to increase our assets by 4,800. So that is that. Also, profit is going to come because debtors, they're going to pay us in later stage. So it means we're going to have a profit. So profit falls under equity. Remember, under owner's equity, we have profits, we also have expenses. So here it is an increase because the business now is going to later on get what? Profit for the goods sold on credit. So it increases our owner's equity of 4,800. Remember, we're told that the cost of sales there, it was 2,800. Let us not forget the cost of sales. And whenever we're talking about the cost of sales, we're talking about expense. So we're talking about what? Expense. So it means our stock is going to decrease by 2,800. So 2,800 means now it is going to affect our assets. Also, it's going to affect our assets. So that is why here we are going to have plus as well as minus 2,800. So this plus, it simply says we are going to have these debtors. That is an increase on debtors, but also we are saying 4,800 also plus this 2,800. So they're going to give us the positive 2,000, which is going to increase our owner's equity, which is going to increase our owner's equity, because now our final effect will be 4,800 minus plus 4,800 minus 2,800. They will give us a plus 2,000. So they're going to give us plus 2,000, which is going to go into owner's equity. Hope we are together on that. So this was for goods sold on credit. So now we are to go to 2.16. So 2.16, it was about returned damaged goods to SA suppliers for 1,800. We are returning the goods, the damaged goods to our suppliers. So that is 2.16. So it means here we're talking about a returned goods to suppliers. So let us come to our answer book. We are talking about returned goods to supplier. Returned goods to supplier. Of how much? Of 1,300. So it means this is going to affect our stock. Our stock is going to decrease because we are returning to supplier. So we are going to return these goods that are damaged to supplier. So this is going to decrease our stock. And this is going to decrease our liabilities. Because once we return them, it means we are no longer going to owe this 1.3 to our suppliers. So that is why it decreases our assets as well as our liabilities. We get that. So now let us go to 2.17. So to 2.17, it says, as police, this is our data now, return some of the goods he bought for 500 and cost price is 300. This time the goods are now returned by the debtors to a business. So it means here like we have what selling price is what, how much? 500, and the cost price is how much? 300. So uh, we have two effects that we are going to apply. So like I've said here on 2.17, we are going to have two effects, as we know that the debtor is returning some of the goods he bought. That is for 500. This is our selling price. 500 is our selling price. And then the cost price is how much? 300. That is why now we are to have two effects on that. That is 2.17, where we are saying we are going to talk about a debtor returned, a debtor returned goods, a debtor returned goods. So we have said how much is our selling price. So we have said our selling price is 500. A selling price is equal to 500 and the cost price is equal to 300. So that is where now we are to have two effects. We are to have two effects. We are to have two effects. That is A, we are to cancel part of sales. We are to cancel part of sale. So that is where we are going to have debtors. Debtors decrease. Debtors are going to decrease. So it means our assets now are going to decrease by 500. Because once they returned goods to us as a business, it means now our debtors are going to decrease by this much. Because once they return the goods to us, it means now we are they are no longer going to pay this much to us. So also income is going to decrease. Income decreases. So our income is going to decrease. That's when we're talking about equity. Of how much? Of 500. Of 500. So that is that. So now coming to B part of this, we can say now B. So stock comes back. Here we are saying the stock. We are saying a stock is coming back. We are saying stock comes back. Stock comes back. So now we are saying stock comes back. So once the stock come back, it means the stock is going to increase. The stock is coming back and then stock is going to increase. Stock increases and the stock is going to increase. It means now our assets are going to increase. Our assets are going to increase by how much? By 300. And we are going to also have expense. Expense is going to be reversed. So it means now we're talking about the equity of plus 300. That is that one of cost of what? Of cost price of cost of sale. So on our final effect, it means now we are going to say final effect. We are going to have assets, which is going to equal to minus 500 plus 300. Then it will give us negative 200. It will give us negative 200. So that is assets. So equity, and equity we are going to have minus 200. This is our selling price and this is the cost of sales. So now we are to put it there on our answer book. So that is when we are going to have it like this. Minus 500. Remember the minus 500, it was for the debtors that are decreasing. Here we remember we said debtors do decrease by 500, and that is also going to affect our owner's equity because the income is going to increase by 500. But coming to this again to decide, we are saying minus 500 plus this 300. Remember this 300 is what our cost of sales. So this gives us minus 200, which is now we're talking about the equity that is going to decrease by 200. So that is why our answer or final answer is 200. So now let us go to 2.18 now. 2.18 is it received a payment of 1,900 from Mpaka as part of settlement of his account after a 5% discount. So that is that. So let's get to our answer book for 2.18. So with 2.18 now, you can see that now we're saying we were going to need to know the original price. We need to know the original price. So as we are told that we received 1.9, we received 1.9 after a discount of 5%, after a 5% discount. So we need the original amount. You can see now we're going to say 95% of 1.9 to get original amount. So you'll find that now we're going to say we are going to say 1.9. It means you're going to say 1.9, 1.9 divided by 0.95, and this will give us 2,000 as our original amount. As our original amount. So hope we get that straight. So like as it is recorded, you're going to have cash receipt. Remember, we're going to receive 1.9. So it's going to increase our assets because you're going to receive cash of what? Of 1.9 after the discount. So now we are going to have debtors decrease. Debtors are going to decrease by 2,000. So that is why we are showing it up like this. So now discount allowed is going to be 100. So the discount allowed is going to be 100 because if you say 2,000 minus 100, 1,900, you'll get what? 100 as a discount. So that is why our final answer there is 100. Thank you very much for your time. Please make use of this presentation as to prepare for the term one accounting return that you're going to write very soon. Thank you very much.